Day before yesterday, our Prime Minister was requesting to buy less and lesser gold. But if you're not listening, the government has got something that will enable you to buy lesser gold because it is going to get costlier. Yes, the government has imposed import duties, higher import duties on gold and silver. This will ensure that you are not able to buy gold as much as you wanted. But the question is why, and more importantly, how this exactly functions. Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh, and in today's session we are going to understand that how higher import duties are going to ensure that government's motive of lesser imports of gold, lesser buying of gold, lesser demand of gold is fulfilled. So to understand this better, let us begin with understanding first thing that what exactly has the government done. Now, government has said that the import duty on two metals, that is first gold and then silver, this import duty has been increased from 6% to 15%. The duty structure, the import duty structure as of now contains two parts. First, it has basic customs duty of 10% and the 5% when we are talking about this 15%. First part is this. The second part is going to come from 5%, which is going to be charged, imposed as Agriculture, Infrastructure and Development Cess. So when we are talking about Cess, which is a tax on tax, you have to understand whatever the cess has been labelled for, that is the cause this amount of tax is used for. Furthermore, when we are looking at this particular step by the government, the most important question comes out to be first is why government has done this. So we have to understand that when we are talking about gold, India happens to be the second highest importer across the world. A very important question here for you, who is the first highest importer across the world? So when India imports heavily, what happens that India has to pay for it in form of dollar. The payment are in dollar. Now if you remember, because of rupee weakening against dollar, it is going to get more expensive for us. We have to pay more dollars. And when we are looking at gold, you have to bring in another factor. When we are talking about crude oil, when we are talking about industrial input, which we are importing, it directly contributes to the economy. But when we are talking about gold, it is more like it has a cultural value, cultural item, especially across India. It does not contribute to the economy. It can be understood as wealth accumulation which is kept on side, but if you are talking about productivity, gold does not directly add to it. That is why government wants that the import bill, which is rising by day and night with increased crude oil prices, with increased shipment cost, with increased fertilizer cost, insurance cost and so much more, let us reduce our import bill with things which are not extremely essential. In this, gold comes as an important part. So government wants to reduce non-essential imports. Furthermore, another important component that comes in here, that if government has to import gold, government has to pay in dollars. Government had to, RBI especially, had to burn immense amount of dollars to put in market in last 2 weeks to stabilize rupee. That means we are already putting so much out of our forex reserves, which will lead to their depletion. Now if government wants to stop this depletion, then we don't want to pay in more dollars. Then we have to reduce items that we are buying in dollars, counting gold. If we are going to do this, that means control the imports, control the depletion of forex reserve. Somehow it will also help us in rupee stability and finally get some strength to widening current account deficit. So to address all of this, this is what government has done. Now when we are talking about import duties, the first thing I would like to bring here is what exactly is import duty. Import duty is nothing but a tax which is going to be imposed on goods which are coming across the border. So if any good is entering India, that means it is being imported into India. When tax will be put on that, it will be known as import duty. Now, when we are looking at it, that how exactly it works. For example, there is gold which costs us rupees 100 per unit. Just simple example, rupees 100 per gram, just to simplify this. I know this is absolutely impossible to imagine, but bear with me. 100 rupees per 1 gram. Now, government says 15% import duty. That means 100 would cost you 115 in our country, out of which this 15 rupee will go to the government. So, if 15% is adding to the price in terms of 15 rupees, if it goes 30%, 40%, that means the price will keep increasing for you. And let us go back to the law of demand and supply. Higher the prices, lower the quantity demanded, because there is an inverse relationship between price and quantity demanded. So, price increasing, demand goes down, and government which wants to reduce the imports, that criteria is fulfilled. Now, this is where we have to most importantly understand that why specifically gold, and when we are imposing duties on gold, why it is sensitive. I have already mentioned one factor, that India is second amongst the importers of the gold, and in India we have to pay in large dollar payments. So, we know these factors, these are very common factors. I am sure you must have been aware about it before me telling. But another important factor that we need to bring in here, that it does not directly increase our productive output. And that is why the government is doubling down on gold as of now. The government really wants to ensure in form of appeal, in form of taxation, to reduce the imports. And this is where you will think, okay, fine, makes sense, government wants to reduce the imports, and this is why it is being done. But why we are talking about, where I just mentioned that it will also help us in terms of current account deficit. So now let us move to understand that part, that how the gold imports are directly linked to current account deficit. So first link you have already established, I am sure, by the discussion that we have done up till now, that higher gold imports, one of the highest, lead to larger dollar payments. If, when we are looking at current account, which is calculated by exports minus imports. So if there is a situation where imports are higher than exports, we are looking at current account deficit. The higher imports go as compared to export, the higher current account deficit becomes. So we already have established higher imports are causing us problem, and these are increasing. But another question that might come to mind, how come more higher imports? Because as of now, especially if you look last year, the equity market was not great in terms of returns. But if you look at the price rally of gold, it was impeccable. So people, investors, they are moving towards gold. Furthermore, you have to account in the global chaos. We have a safe metal to invest in. Investors have a safe metal. So in the times we are seeing, especially from past 1 year, the demand of gold is also amplifying. So imports were existing, price we had to pay, but with rise in price we have to pay more. But furthermore, the demand for gold is also accelerating, and that is why gold is affecting the current account deficit. These higher gold imports are not just causing bigger dollar outflows, they are also leading to bigger trade deficit. They are pressurizing our forex reserves and then dampening the presence and strength of rupee as well. Now another question that we need to understand here, would this be enough to address the situation? Because the reason gold is being demanded more and more, that still exists. For example, I talked about that how there are weak equity returns, how there are global uncertainties still present, how there is expectation of better returns in coming time. We also get to see better boom, especially when we are talking about gold ETFs, metal ETFs. And in the recent appeal also, it has been clearly highlighted that we need to avoid gold purchases temporarily. But when we are looking at these 4 reasons from the perspective of an investor, and then when we look at this appeal, these are coming towards 2 very different segments. If you are looking from a lens of an investor, you would want to still invest in gold, because this is where you still expect the price rally to go above and ahead, because these factors remain valid. But on the other ground, where we are looking towards protecting the national interest, there are multiple debates around that as well. because when we are talking about an appeal to the common person, we are also looking that how that other people, ministers, businessmen, and also all the big shots, how are they tackling to this appeal, but at the same time it comes through as a contribution towards nation's economy. So first question I have here for you is the fact that do you think this appeal is something that resonates with the mindset of an investor, as a retail investor or someone bigger than that as well. But at the same time, we have to understand that just raising the import duties will not solve all the problems. It has led to higher prices, but it can lead to higher illegal imports as well. It can lead to black market activity, hawala networks, and multiple other issues such as stagnation in jewelry sector, higher jewelry prices, and especially reduced demand in bullion market. And this will create a parallel issue in economy which government would have to decide that how to handle. Because if you especially look, when the import duties were reduced back in 2024, especially when you look, when the import duties were reduced 2 to 3 years back, that is when we recorded lesser number of illegal imports, lesser number of hawala transactions, and so much more. So this is another challenge. Government is trying to address this, but another thing will crop up from the side which government should address, understand at once. What are your thoughts on this? Let me know in the comment section. What do you think should be the way forward? The way forward should be public coming together and contributing to the cause, or government taking much harder measures to ensure the viability at the macroeconomic level stays. At the end, I'll be leaving you here with a prelims practice question. Let me know the answer in the comment section. That was all from my side. Thank you so much.